Hi guys, welcome to Morning Trade with Money Control. I'm Karunya Rao and I'm here to help you navigate today's trading session with actionable strategies, sectoral trends, and most importantly, we'll be addressing your queries with our technical expert on the show later today. But let's talk about how the global handover was. European markets closed lower on Tuesday with investors digesting a rise in oil prices and fresh economic data out of the Eurozone. Stoxx 600 ended about 0.5% lower. Other key bourses also settled lower in trade. On Wall Street, stock futures are flat following the S&P 500's third straight losing day. And not just S&P 500, even the Dow shut shop in the red for the third day on the trot amid relatively thin trading volumes. Nasdaq Composite finished little changed. As far as Asia Pacific is concerned, they are trading mixed after Wall Street continued its slide. SGX Nifty down about 0.3% as we speak. Stocks in the spotlight: Adani Enterprises, Devyani International, Arvind Smartspaces and Chennai Petro. We also take a look at the ongoing issue of SGBs and discuss if gold is still the way to go for diversifying your portfolio. All right, let's talk technicals first with Ruchit Jain. Hi, thanks so much for touching base with us this morning. The cues are not very encouraging or strong, actually far from strong really. But talk to us about what we can expect. The SGX Nifty right now looking muted. Can we buck the trend and trade in the green, or could it be a somber session?
Hi, very good morning, Karuna. Well, we have seen in 3 trading sessions the market corrected sharply from that 18,000 to 17,350 at open yesterday. Now, 17,350 was the 20 days exponential support where we witnessed some intraday bounce. But primarily, if we see the data, then the data has turned negative since last 2 or 3 trading sessions. And even the chart structure is indicating that we would not be in a hurry to show any significant up move from here on. So, firstly, to start with, I think traders should have a look at the dollar index. Well, after some correction towards that 104 mark, the dollar index has resumed its uptrend and it has again crossed hovering around that 109. And generally, we have seen in the last few months that whenever dollar index has been in an uptrend, our markets have reacted negatively as we are inversely correlated with that. Secondly, FIs have not been showing great buying activity in the index future segment. And recently, last few months indicates that whenever they go shorts in the index future segment, then the markets have reacted negatively. So I think around last week's weekly expiry, their long short ratio was around 60%, where 60% of the positions in index futures were on the long side and 40% only were on the short side. But post that weekly expiry, they have unwound some of the long positions and have also gone some shorts. So hence their long short ratio is now hovering around that 50% mark. So near-term trend would, I think, more depend on how FIs shape up their positions. They are clearly not showing any signs of fresh buying in the index futures segment. So in case if they start shorting in the index futures segment, then that would be more negative for the markets in the near term. So dollar index as well as FIS figures are indicating that markets would not be in a hurry to make new highs or to go above 18,000 levels very soon. So I think it should be a sell on rise strategy for the market participants. On the higher side, this is a retracement move. We have corrected from 18,000 to 17,350 and markets are retracing this correction, and this retracement resistance would be seen somewhere around 17,670 followed by 17,750. So I think today if we open negative, we might see market again coming in the green towards that 17,670 mark. But that pullback move should be used as an opportunity to go short or exit from existing long position. So it remains a sell on rise market now until we see a crossover above 18,000 again.
All right, okay. Ruchit, stay on with us. I want to also bring on board Ashish Shankar of Motilal Oswal Private Wealth to talk about managing your gold investments specifically in times like this. Ashish, thanks for touching base. I want to understand what has been the trend like, because typically gold is a slow mover. It's a safe haven investment. Also, of course, a lot of retail investors who want to diversify their portfolio opt for this option. But let's talk about the way even gold has been volatile over the last few months. From 55,600 levels, it has seen a downside of or a low of 47,000 as well. So very divergent, very wide range that it has been trading within. Is it still a safe, stable asset class to invest in, or are there more avenues for today's new age investors?
Hi, Karunya. See, look, traders have to be vigilant about these near-term moves. And our view is that in the near term, gold will be headwinded. If you look at what's happening globally, we are seeing central banks raising interest rates. And typically, this kind of environment is not necessarily healthy for gold in the near term. However, for longer term investors, we've always been advocating that gold has an integral place in the portfolio. It could be between 5 to 15%, depending on the portfolio allocation and the risk that someone is willing to take. You're right that gold is quite volatile, but remember, having gold in your portfolio also gives you that insurance during crisis periods. Typically, we've seen that gold is negatively correlated to risk asset classes like equities. So during big crisis moments like the pandemic or the subprime way back in 2008, these are times when gold actually does extremely well during those years. So it gives you the cushion in the portfolio when there is a crisis and risk asset classes correct. And it also gives you the firepower to rebalance into the risk asset classes when they become cheaper during these volatile periods. As far as these SGBs are concerned, I think it's a great way of holding gold in the portfolio. I mean, these SGBs are 8-year maturity. You get an exit after 5 years. It's a 6 monthly interest coupon of 2.5%. So the way to look at it, Karunya, is that the gold price in rupees is also a function of how the USD rupee behaves. And typically, we've seen that INR has depreciated at about 3 to 4% per annum. There are certain years where the moves are very sharp, but generally, if you take a longer term period, you have 3 to 4% depreciation. So with 2.5% coupon and 3 to 4% depreciation, you're at least more or less certain to get about 5.5% over the longer run. And whatever moves gold shows in dollars is a bonus. That's how I look at it. But look at gold as an insurance in the portfolio for longer term investors. For shorter term investors, I would currently be a little cautious.
Okay, all right. So it could see some more gyrations perhaps in the short term because the view is a little cautious. But long-term investors can, definitely continue their investments is what Ashish is saying. But let's talk about the macros because the picture is not looking very good. There is, of course, the big question of will the fledgling US recession deepen or dollar regain steam again? International prices, like you said, they have been slightly more trickier at times like this. What other avenues are there for investors to park their money in? Of course, gold is the most obvious, the most stable option. But are there any other ways to perhaps hedge your portfolio against weakening macros or overall weak market sentiment?
Right. See, gold definitely is a good asset class to have during crisis periods. We are also seeing fixed income yields moving up, Karunya. For a long time, I mean, if you look at the last 2 to 3 years, you saw a surge of flows into equities, and we saw the demat accounts almost doubling over the last 18 months to 24 months. Partly, a lot of this trend is structural, where more and more savings are being financialized and moving into equities through SIPs and longer term structures. However, a lot of HNI money also came into equities because fixed income yields were extremely low. I mean, you had fixed income yields at about 4 to 5%. With the recent interest rate hikes, you have good quality bond portfolios which can generate now anywhere between 7.5 to 8%. And if someone is willing to take a little more credit risk, then you can go above 8%. So we are seeing a lot of interest back into fixed income. And for people who do not want the kind of volatility that they're seeing in equity markets, or for that matter, even gold in the near term, I think fixed income can provide a good, security in the portfolio. And the yields have also headed higher. So if you work a little harder, I think getting 8 to 9% is not a challenge. In terms of macros globally, you're right. I think we are looking at a weak macro in US. However, earnings have been strong last quarter. I do believe that you will see some kind of earnings recession in this quarter. It normally hits with a lag. For India, it's a bit. It'll have an impact on Indian economic growth as well. But from an investor point of view, I think from a longer term investor point of view, I mean, I heard the technical view, but for longer term investor, it's a buy on dip market because if you look at it in reverse, a weak US economy, a weak earnings season will also mean that Fed will be a little more cautious in hiking rates, and you'll probably see lower rates sometime next year. And Fed will actually might have to start reversing the rate hike decision. So that is normally positive for emerging markets. So if the markets do correct and they come to attractive valuations, then you could look to add equities. But fixed income is looking incrementally more attractive, Karunya.
Okay, all right. Let's talk about the ongoing SGBs offer that is out there for investors till the 26th of August. Good pricing this time around, pretty much at 51,000 odd levels. Looks attractive. Talk to us about investing in SGBs. Is that the way to go for new age investors who want to purchase digital gold, or do you think ETFs and bonds could be a better way to look at it?
Yeah, so just to quickly run through the details of this issue so that your viewers are appraised. This issue is open between 22nd and 26th. Allotment is on 30th. The average price discovered from last week's 3 sessions is 5197 per gram. However, people who applied electronically can avail a 50 rupee discount. So the price comes out to 5147 per gram, which is quite attractive. One can subscribe to as low as 1 gram. And on the higher side, in a financial year, an HNI can subscribe to about exactly 4 kilos. That's the limit. So it's a very, very big limit, Karunya. My view is that, I have already explained that I do believe that every investor who's doing asset allocation should hold between 5 to 15% in gold. Now, the way to do it is that SGBs is a great option because it gives you coupon on an asset class which is otherwise dead, does not yield you anything. So SGBs definitely should be part of the gold allocation. The way to do it is that SGBs can easily be 50 to 70% of the gold allocation of an investor. And the reason being that it's an 8-year instrument, you get liquidity after 5 years, but it'll be listed on the bourses. So in case in an emergency you need to liquidate it, you could liquidate it at a discount. So it yields you 2.5% per annum, like I mentioned. Maybe 20 to 30% of the gold allocation can be through ETFs, Karunya, because ETFs are more liquidable. So a combination of SGBs and ETF is a very good way to hold gold in your portfolio, because you also need gold as firepower during crisis where, let's say, if equities crash, then you need that flexibility to probably move some money from gold back into equities when they become cheap. So that's why it's always good to have some money in ETFs, and you could probably have a significant portion of the gold allocation through SGBs. They're a very good instrument.
Okay, makes sense, Ashish. Thank you so much once again for joining us and for sharing your thoughts and your observations of investing in gold amid current times, and telling us what is better, SGBs vis-a-vis ETFs, and how one should look at balancing it if you're looking at asset allocation. Thank you once again for joining in.
Thanks, Karunya.
Let's go back to Ruchit Jain. Let's go back once again to Ruchit Jain and talk markets. Ruchit, want to flag off some stocks that could be in the news today. First up is, of course, Adani Enterprises. Its arm AMNL is going to be indirectly acquiring 29.2% stake in NDTV. They also look to launch an open offer. And this indirect subsidy, which is called Vishwa Pradhan Commercial, VCPL, is going to acquire 99.5% stake in RRPR Holdings. Now, RRPR is a promoter company of NDTV, which holds this 29.2% stake in NDTV. Ruchit, yesterday, I think, in the evening, the entire discourse was dominated by this particular deal, this particular stake purchase. Talk to us about how the stocks could react. NDTV, of course, has seen very, very wild moves last couple of months. But even Adani Enterprises, could it see some action today?
The thing is, NDTV has already been moving higher. I think this news flows would, of course, support the prices as well. So we expect NDTV to continue its up move, which we have seen in the last few months. And technically, if we look at some of the retracements, reciprocal retracements, then it could move higher towards that 464, even 460 to 470 range in the short to medium term. Now, as far as Adani Enterprise is concerned, the stock has already given a good run up in last few months. The momentum readings are a bit overbought zone, but we have seen that many times whenever the trend is quite strong, the price performance continues in the overbought zone as well. So we may see a continuation of this up move in the near term, but the risk reward ratio for creating fresh entry over here in Adani Enterprise, I think is not that favorable. So I would say that if existing positions are there, then they should continue to ride this trend by keeping a stop loss below 2850 now, which is the 20 EMA, which is around its 20-day exponential moving average. And on the higher side, if the stock goes around 3350, 3300, then I think one can take some money off the table. But I won't advise fresh buying in Adani Enterprise because of this news, because we've already seen a good price run up over last few months and the momentum readings are overbought, which does not make risk for current point.
Okay. What about Chennai Petro? Want to also flag it off. We don't talk about the stock very often, but there's been a news development which I want to bring to the fore. The board has approved JV with IOC, seed equity investors, for 31,580 crore refinery project. Now, this JV will implement about 9 MMTPA refinery project at Kaveri Basin. Talk to us about Chennai Petro and how the technicals are placed.
So more or less we have seen that there is some direct correlation with the crude oil prices in Chennai Petro. Recently when we had seen some sharp up moves in crude oil prices over a couple of months ago, the stock had given a very good returns. And when the crude oil prices corrected, again we saw some price-wise correction in the stock as well. Now yesterday again we have already seen, based on this news, we have already seen a good price up move, and the crude oil prices have also showed a good up move yesterday. So I think in the near term, we would see some up move in the Chennai Petro stock prices as well. On the high side, 320, 324 could be seen in very short term. So the biasness should be positive from a trading perspective till crude oil holds with these gains, and 320, 324 at least should be expected.
Okay, makes sense. Moving on then to our next stock in focus, Arvind Smartspaces. So this particular company, which is Arvind Smartspaces, HDFC Capital Advisor, both of them will collectively be investing 900 crore rupees in Arvind Smart Homes. Both entities, Smartspaces and HDFC's entity, will be engaging in acquisition and construction of real estate projects. How is Arvind Smartspaces looking?
So the technical structure is positive for the stock. A higher top, higher bottom structure is getting formed, which is indication of an uptrend. And the 20 days exponential moving average on the daily chart is acting as a support on declines. And also if we see recent last few months, this price up move from the swing lows have been supported by good rising volume. So generally when there is a higher top, higher bottom structure, the volumes are good along with the price up move. Such stocks tend to show a relative outperformance in the market. So till the stock is trading about 200, I think the trend would continue to remain positive. So one should trade with a positive bias with a stop loss below 200, expecting target somewhere around 240 to 250 range.
Okay, all right. And finally, there will be Devyani International, which could hog the limelight on the back of bulk deal action. Investor Dune Arm Investments Mauritius has offloaded close to 2.2% stake. Previously, it held 8.13% stake in the company as of June 22, and they have clearly sold about 2.2% out of that. Devyani International definitely was in focus yesterday as well on the back of this story. And tell us how it could open today, because 5% down by the time it shut shop. Could there be some reversal today?
So, Karuna, the broader trend for the stock is positive. We have seen a good price up move recent, supported by good volumes. But I think just because of this news, we had seen some corrective phase, and this could just be a retracement of the previous uptrend that we have seen. Now the support for the stock is a bit low at lower levels, which is around 168 to 170 range. So I think maybe in the near term we would see some pressure in the stock. Pullback move towards 200 would again see some selling pressure, and 168 could be seen. So ideally, if one is looking to do any bottom fishing in this stock, then on corrections towards 168, 170, one should again review the stock over here. But at current levels, I would not advise to take any contra trades over here.
Okay, all right. Let's bring on board some of our viewer queries as well quickly. The first question is on Infosys, and this is from Aman Pratap Singh. Talk to us about how the chart of Infi is looking, because Yes, it has seen some uptick in the last 1 month, but last 1 week, once again, it had witnessed some selling, some sort of sluggishness on the counter, but it's still above that 1500 level. Is it a good time to buy, or do you foresee some more pressure before it once again picks up steam?
So last 1.5, 2 months, most of the sectors have seen a pullback rally from the lower levels. And it is crucial to analyze that which are the sectors that have shown a relative underperformance. Means they have seen a pullback move, but relatively to broader market or to the benchmark index, they have pulled back lesser. So I think IT is one of those space where we have not seen much retracement. If you look at the banking space, a good outperformance has been seen in banking space, where even some of the large cap stocks such as ICICI Bank, State Bank have even shown all-time highs. And Infosys or other IT names, we have not seen very sharp pullback move. They have gone up, but this is just a retracement rally, so this does not give much confidence that the stocks have bottomed out, and we would see next leg of up move from here on. So I think there could be a possibility of time-wise correction as well, when for next 2 to 3 months we would see the stocks from the IT basket trading in the broad range. And so the upside should be limited from here on, at least from a near-term perspective. So one should not be in a hurry to do any bottom fishing over here. 1500 would be the important support to watch out for, and in case in the near future if we get the stock around that 1500, and if we see some positivity in the global market, especially the Nasdaq, where we have seen some sharp corrections recently, and our markets, IT space have more been following what is happening in Nasdaq of late. So I think let it come around 1500, then one should take a review. But at current levels, it does not seem to be a great buy from a trading perspective.
Okay, all right. Next two queries are from the banking space. One is on SBI. Michael has written to us and he wants your view on this counter. And Vasudevan wants your view on Axis Bank. If you could give us a comparative analysis as well, how both of these charts are panning out.
Yeah, so if you do some comparative analysis, then the recent trend have been more strong in SBI compared to Axis Bank. Even Axis Bank has seen a good run up, but SBI has already hit an all-time high, and from there we have seen then some correction. Now Axis Bank is trading around that 78.6% retracement mark of the previous correction, which should be a resistance in the near term. And given that market could see some corrective phases in the short term, so I think in the September series we may see some price-wise correction in the Axis Bank from the higher levels. So on the higher side, 770 to 780 is the major resistance or major hurdle for the stock, and until we see a breakout above the same, I think the upside should be limited, and if the stock gives a pullback towards that 770, 760 range, then it should be a good opportunity to lighten up some long positions if you have short-term view. State Bank of India, relatively after results, we have seen some price-wise correction from the higher levels, but I think the stock would show more of a time-wise correction going ahead, and compared to other banking space, the stock might show some relative outperformance. So for now, you can continue to hold on to your long positions, but 500 is the support for the stock. So any long should be held below with a stop loss below 500, and on the higher side, 535, 540 would be the range resistance, immediate resistance range to watch out for.
Okay. What about your own picks, Ruchit? What are the stocks on your radar?
Yeah, so Karuna, as I said, the September series, we believe that we would see some corrective phase in the markets. And if the market shows some price-wise correction, then defensives would again come into force. Now, if we talk about defensive sectors, then usually there are three sectors, which are known as defensive. One is IT, FMCG, and third is pharma. So I think IT would be doing what the global markets, what the movement we see in the global markets, especially the Nasdaq index. So we are not that keen on IT space because the retracement up move was also not that big recently. FMCG basket has already seen a good price up move, and the momentum readings in FMCG index is but overbought. And even stocks such as HUL has already given some signs of exhaustion. So we believe that pharma would be the only space where the defensive buying could happen in the short term, and we would see some relative outperformance, especially in some of the large cap pharma sales. So Cipla within the pharma space is my top pick over here from a short to medium term perspective. Since we have seen a good chart structure of late, the price up moves are supported by good volume, so one can go long on Cipla with stop loss below 1005, expecting target somewhere around 1100. And one would be a short call, that would be short in UBL. The stock has given a breakdown from a rising trendline support. The price retracements are over. The momentum readings have given a negative crossover. So some price-wise correction is expected in the short term. So at least from 1 week's perspective, one can go short on UBL with stop loss about 1650, expecting targets around 1570.
Okay, so 2 calls coming in. Sell on UBL and buy Cipla. Thank you so much, Ruchit, for joining in and for sharing your assessment of the market and, of course, helping our viewers out with their host of queries. With that, we're out of time. So it's going to be a wrap on Morning Trade. Thank you so much for watching. Stay tuned to Money Control. Markets with Santo and CJ will come up next.